Gold prices tanking over $70. John, why this enormous sell-off today?
Look, it's not just limited to gold. The entire commodities complex has wiped out its gains for the year. Not to mention how poorly Asian and European equities markets have fared overnight. It's an absolute tantrum by most markets, and I think it really underscores the degree to which they had become dependent on incessant liquidity injections by the Fed. And now that the Fed has turned the battleship and said, at least, look, the balance sheet stays put, but we're not giving you more candy. Absolutely everybody's stomping their feet on the ground and selling off anything but the good old dollar, right? Or the bad old dollar.
But you could also, gold obviously hasn't erased its gains for the year, and at some point we're seeing that safe haven buying for the US dollar. Don't you think that's going to come back into gold at some point at a certain attractive level?
On a reasonable basis, it ought to. I mean, we are down more than 5% on the 30-day trend here in gold. And I can tell you this, it's entirely possible that we could have one more push to the upside, possibly well beyond the previous highs in the low 1900s. But that has to come about quickly, and it has to first come on not breaching the low 1700s, because if we do that, we're basically going for that correction that I told you about several weeks ago. Initially down to the mid 1600s and then possibly to that 1480, 1500 where we began in early July.
It just seems, John, to interrupt you, it just seems like stocks would have to have a really big rally for gold to sell off that much right now.
Well, it's not necessarily about the stocks. I think at this point, most people are watching the dollar, and the dollar finally has come back to, its inverse relationship with gold and, of course, certain other commodities. It's well bid because basically short-term yields are possibly going to rise here on the heels of this move by the Fed. And people are realizing that at the end of the day, you can have a stimulus of sorts without actually undermining the dollar and making it die. So in that sense, it's really the focus at the moment. The one problem the gold market currently has is that it has become so overly dependent. In fact, it's a junkie to investment demand by the funds. And of course, the funds, I think, have a different mindset just about now. And partly because of the need to raise cash, partly because they're tired of perhaps they see the complex as being tired after 10 years. Some readjustment is in order, even on their books, as we head into the window dressing final period of the year. So, the jury's out. I mean, volatility is going to continue here, absolutely. You're going to see these $40, $60, $80 moves intraday and day to day for weeks to come, very likely.
All right, so we have that support level, $1,700 gold prices. If not, we're in for some deeper pain for gold. Thanks, John.